All right, welcome back, traders. This is Kyle Bazzi stepping in for Joel Connon today for the holiday. Co-host Dennis Dick, and we got our first guest of the day, Harlan Pyan from All About Trends. Remember, this show is brought to you by our friends at Charles Schwab. Just ask Chuck. Hey, Harlan, good morning.
Hi, good morning. How are you?
All right, let's start off with your overall views of the market right now.
Really not much to say. Support held, support got defended. It's all about support. It's all about resistance. You look at the S&P, came down, tagged that 1980th zone, which is also the 50-day moving average, and away we went. So also, you were talking about the 3 to 4 days with GoPro. Same deal. The S&P 500 and the NASDAQ, we kind of have a rule of thumb as well. On the third to fourth day, expect a reversal. Well, look at in the morning yesterday, S&P 500 was, down fourth day in a row. So third to fourth day rule kind of came into play, and here we are off to the races. So end of the quarter. So who knows? Maybe we're just going to keep going right up into the end of the quarter.
What do you think? Do you think GoPro pulls back here on the third day here too? Do you agree with that? That this GoPro here, it's up $2 in the pre-market. Do you think it can close negative? Because I think it can.
Yeah, it can. Well, it's going to do what it wants to do, but it's extremely extended short term. It's been a heck of a run. Who's buying this thing in here is late to the party. So I'm looking at it. I wouldn't touch it right here. There's just no way I'd put my money in it. I don't like buying extended stocks. But you're right. It pulled back, consolidated, 3, 4, 5 days, and off to the races.
What are you putting your money in, or what are you touching right now here, Harlan? Talk about your stocks that you like.
Stocks I like. Tesla looks pretty decent here. It's if you take a look at Tesla, and it came right down. Line up your lows from. Take a 6-month daily chart, June through current day. You can kind of see it came and sold off right down to the 245, 250 level, which is multiple supports down there. You've got your uptrend line off of the June lows. You've got the breakout from beginning of August, came back and retesting that. And here you have a stock that's in a clearly defined uptrend. That's pulling back off its highs, and it's also right around the 38% Fibonacci zone, and it's oversold. So those are 3 things that I'm looking for, and I like it. We bought it in the face of fear the other day, down around the 245 level. So, 1 of 3 things are going to happen for us here. We're either going to make money in a trade, we're going to wash on it, or we're going to get stopped out. If it breaks this 245, there's more support at 235. So, percentage-wise, it's not a big deal. But what you're seeing yesterday, you talked about the biotechs, a lot of big bios, and even Facebook and Apple. What do all these names have in common? They're all big index components. So, here's that end-of-quarter shenanigans, as a few of my friends like to say. So we'll see if we follow through, and they move all the big go-go names.
All right, we got a couple of tickers in the chat here, Harlan, from Rob Hood. If you want to take a crack at them, I don't know if you're trading these, but MSG is coming up on the chart. You have any thoughts on MSG?
MSG.
Madison Square Garden
Rob
Company.
Hood's good. He always looks for the Harlan Pyan charts. He's like your biggest fan out there, Harlan, and he always gets the one that made the new all-time high, and then it's consolidating for a little bit, and it looks like it's itchy, ready to go there too. And that kind of does look like a Harlan Pyan chart.
It's going sideways. Call it 64 to 67 and change. If you want to use 68, you can use 68. Madison Square Garden is what we're talking about, right?
Yeah.
Okay, all right. That's about all I can say with it. Right now it's range bound between 64ish and 68. For those of you who are breakout buyers, you're obviously looking at the 68 as a breakout. If if it breaks out, great. I don't know. I'd like to see a little bit more consolidation. I mean, if you look at MSG, the month of July, you hit a peak in July and then a nice orderly pullback. Bigger is better, just like bases. Bigger the base, bigger the breakout. Same applies. Bigger the pullback off highs, bigger the breakout. So look for those that have been, pulling back off their highs for, a few weeks versus a few days. When you're looking at issues that are pulling back off highs for a few days, you're kind of entering into the more of a day trading and swing trading mentality versus a little bit longer term stance. It just depends on who you are and what type of time frame and frequency you're trading.
Here's a little smaller one there for you. EXAS, which is Exact Sciences Corporation. And this one looks like a Harlan Pyan chart there too, because the stock took off there in August, made new highs in September, but it pulled back significantly off those highs, and then had a good day yesterday. So just starting to show a little bit of life. Looking at EXAS there, Harlan.
There you go. That's exactly what I'm talking about. It hit a peak, pulled right back to. You notice what the lows of not yesterday but the day before were? 50-day moving average. So that's what you're looking for. I mean, look at this stock off of the May lows. It's just a bunny hop stock. 2 forward, 1 back in July and August, and then 2 forward, and now we're here in the 1 back. So it's real simple. I mean, if you're going to take this trade, if it breaks its uptrend off of, I'm going to use the August lows through 2 days ago, which is also the 50-day. If it breaks that, you got to go. So, is it going to test new highs? I don't know, but there's your trade. I mean, it's a nice stock in a clearly defined uptrend, pulling back off highs to the 50-day. That's all you need to know.
Harlan, how now? At your website, I dropped it in the chat for everyone to take a look at, allabouttrends.net. What time frame are you looking back at? So you pull up EXAS. What type of time frame are you looking at the charts?
Well, for me, I'm always working within the 6-month chart with a 50-day moving average. That's the time frame and frequency I'm initially operating in. But all of these patterns I talk about, believe it or not, they work in all time frames and frequencies. I'm always looking for these pullback off highs and clearly defined uptrends. Why don't you pull a chart on the NASDAQ Composite 1 day, 1 minute chart?
Okay.
It's really a great chart, actually. So for you day traders and scalpers, this is just a great setup I'm going to show you here.
Let me see if I got it in here. And you wanted
because lately,
the 1 day, the one. I'm not sure if I got that on the chart up here, Harlan.
Which time frame? Where are you looking, Harlan?
1 day, 1 minute. Basically, yesterday's
Go to
action
the
on the NASDAQ Composite.
intraday. Okay, we're having trouble getting that one, so we might have to just move on here, Harlan.
Right.
We've got Nita.
Yep,
She's
go ahead.
asking about KORS, which is Michael Kors, and it's been very weak here. Seems like the stock cannot catch a bid at all. Do you think there's any type of hope here for Kors, or do you see this downtrend just continuing in Michael Kors?
Well, I think you kind of nailed it, downtrend. I mean, just look at a 6-month chart. What's the overall trend of the stock? It sure looks nothing like what we've been seeing with Apple, Facebook, things of that caliber. I can say this, you had support at 75 and you broke, it was trying to stabilize at 75. How about that? You broke it, kind of shipped some more people out, and we'll see if that was a shakeout low here. But, it's not exactly a market leader. It's not something I'm looking at, only because, on the long side, there is no pattern here. It's just going to need some chart time. So, it either topped or it's deep in an intermediate term correction, and it could sit there and choose here between 75 and call it 83 for 3, 4, 5 months. So stick with the leaders. Only the best, forget the rest.
We are in such a momentum market here too, and it seems like the strong get stronger and the weak get weaker. We've been looking at gold going straight down. We've been looking at these GoPros and these new IPO stocks that continue to just find life despite whatever valuations they have. So it's a momentum market here, and the momentum is clearly to the downside. So if you're buying the stock down here, you're definitely bucking the trend, and we always say the trend is your friend. So I'm a more fan of selling the rips on this than buying the dips.
Now I got a question, guys.
Don't fight the tape.
This is, and I'm reading the site the other day, Harlan. It says, we trade what we see, not think, hear, or fear. But as a retail trader, a lot of the beginner traders, they fear this huge downtrend coming through and kind of sweeping out this bull market. How do you guys, Dennis and Harlan, as more experienced traders, approach a market right now that we could be hitting all-time highs, or does it not matter?
Well,
Harlan,
the first thing you do is you define your risk. You want to define your risk. And the way we define our risk is we don't put more than 5 to 7% of our overall portfolio into any one position. And what that really means is this. Let's say you have a 5% holding in ABC stock. All it does is make up 5% of your overall account. And let's say bad news comes out after the close, over which you have no control over anyway, and the stock gaps down 20%. On its own, that's nasty. But if you have a 5% position, you know what the total impact to your account is? 1%. So that in itself helps you manage your risk, because it's really all about managing risk. So that's one fail-safe that we put in right from the start. But, at some point, we're going to get into a correction. I don't know when, but, when you start breaking moving averages, you start breaking trend lines, that's the type of things you want to watch for. And right now, every single index, well, let's just talk about the S&P and the NASDAQ, they're in clearly defined uptrends. They're above the 50-day moving average, higher highs, higher lows. So don't fight the tape. When they break, you're going to know it.
What about you, Dennis? You got any thoughts on that?
I agree with diversifying your trading portfolio. If you can do that, obviously you want to do that too. Ace is pointing out that a lot of people, with small retail accounts don't have that much money in these accounts, so it's sometimes difficult for somebody that's got like $10,000 or $15,000 in their account to really, run a diversified trading portfolio. But if you can, I do diversify my own holdings as well. I would never probably have any position over 5 or 7% of my overall portfolio either, even for trading positions, because bad things can happen intraday too. And if you have, all of your holdings, half of them or 3/4 of your money in one stock, even if it's just a day trade, stocks do get halted intraday. I've seen it happen. I've been trading for 15 years. I've been a part of probably at least 7 to 8 day trading halts where I've actually, was in the stock and it got halted intraday. And it's a scary thing. It's a scary thing if you have a really large position and all of a sudden your stock gets halted, because once news comes out, technicals take a back seat. We know that. So if you're in this thing for a technical trade and all of a sudden they break news and they're, coming out and pre-reporting, or there's something else happening bad with the stock, it goes the wrong way and you could get really hurt. So I agree with him diversifying the trading portfolio. And I also agree with, I'm a big fan of looking and knowing what the overall trend is. I like to look at, different time frames in my charts. I like to look at the, the intraday chart, but I also look at the dailies of the weeklies and get a feel. Is this stock strong or weak? Like when you bring up Michael Kors, KORS, and you look at it from yesterday's chart, well, it looks like, okay, well, it's kind of, found a little bit of a bid there yesterday. It's trading up near the highs. But when you bring it up on a daily, this thing looks weak as hell because it took out that major support down there at $75. It's kind of a breakdown day. It did find a bid there late in the day, but you need those different time frames to really give you the clearer picture on which way the stock is going. So even if you're making intraday trades, it's nice to look at the dailies to kind of know where the stock has come from and maybe whether there's overall buying pressure or overall selling pressure in the individual stock.
Amen. Right, that's exactly what it is. You start with the dailies and then work your way back.
I got one question, Harlan, for you on that too. Do you ever set hard stops, or are you more mental stops in your positions?
I'm more mental stops because I don't really want to show the guy that's sitting at the table next to me what my hand looks like. And typically when you set a hard stop on the books, all those programs out there, they know where your stops are. And they take you out quite a bit. You ever see all these big shakeouts? You see these big shakeouts. It's almost as if the trade bots see those orders on the books and they go out down there, they shake you out of the stock, and then they run it without you. So I try to use a mental discipline.
We talk about that the stops to the stop running, but it's overall it's just HFT noise is what it really is. I just wrote an article for
Mm-hmm.
CFA magazine, and I was talking about how traders nowadays need to ignore the little HFT noise because high frequency traders are really concerned with the very short term. They're concerned with making a penny or two here. The key is to try to ignore all that because they're going to try to shake you out. They're going to try to get out of the position. So when you look at a tick chart or something like that, you can get shaken out left, right, and center because the stocks just our moves aren't often as smooth as they used to be because there's a lot of little participants that are jockeying, market making, doing all kinds of different fun stuff. There's algo wars out there. I mean, 70% of your volumes from high frequency traders. We're gonna have Kevin McPartland on here in a little bit, and we'll talk a little bit more market structure with him after 9 o'clock. But with so much volume and so much participation from machines basically and short-term trading machines, it does give you a lot of noise stuff that if you can ignore it, if you can look a little bit longer time frame, it won't impact you as much. But if you're sitting there trying to scalp or trying to to really do short-term day trades, it's tricky. So if you extend that time horizon a little bit, ignore all those little whipsaws, not have your stop sitting 5 cents away because like Harlan's saying, if it's sitting a nickel away, they're going to run it. So if you can have a little
Right,
bit longer time frame.
And that's exactly why you want to start with the daily charts and manage the overall trend to smooth out that volatility, to smooth out that noise. And that's where trend channels come in, uptrending channels and downtrending channels, things like that. These guys are here to stay. So, you want to be able to maintain a mental equilibrium without, anytime the wind blows, you don't get blown away. So, and that's where the daily charts really help you out, and the use of trend lines and trend channels.
All right, Harlan, dropping some education on us because I think it's so important. As traders and investors, we're always evolving our game and getting better. Before we hop off with you here, Harlan, I want to pop over to Goldman Sachs on the chart and look at the financials as well.
Yeah, they've been on a tear. I think they make up 13% of the S&P.
Big chunk.
So,
wow.
Yeah, big chunk. So if you look at it, Goldman Sachs, Wells Fargo, they're running up here too, right into the end of the quarter. So, are they a bit extended in the short term? Sure. But, what's the overall trend of the stock? Just look at Goldman Sachs off the May lows. Line up the May lows. It's in a clearly defined uptrend, and it's bunny hopping on the way up. 2 forward, 1 back, 2 forward, 1 back, all within a clearly defined uptrend. It's closer to trend channel resistance if you line up the highs. But, that's what we're talking about. This is what you use to smooth out that volatility and that noise. Manage the overall trend. Don't chase them when they get to uptrend channel resistance. You kind of pull back and say, all right, well, I'm not going to be a buyer here, but show me trend channel support. Sure, I'll be a buyer.
All right, everybody, that is going to do it for us with Harlan today. Harlan, I really appreciate coming on the show on this holiday Thursday, some light volume. Always some great tickers. Everybody, go check out allabouttrends.net. It is some fantastic trading ideas there. I know you and your partner there, David, do a great job for the customers. So thanks a lot for coming on today, Harlan.
Thank you much. Take care, guys. See you later.